Hi, everybody. This is Barry Eustance and Remco Althuis, introducing the first of what will be a series of podcasts and reports from the Stratos 12 airline consultancy. Just to bring you into the picture, Remco and I, Richard Nanton and Jean-Marc Ishar, have launched the Stratos 12 airline consultancy to work with carriers to really resolve the sort of difficult problems that airlines have that take them from disruption through to delivery. And this is going to be, as I say, a frequent contribution from us on basically the state of the airline industry generally. Today, we're going to look at basically Europe's small airline sector. And let's start broad, basically. What defines the small airline segment in Europe, Remco?
Hey, hi, Barry. Good to be back with you again. Well, a few things. Smaller airlines obviously usually have smaller fleets. They have concentrated networks. They fly to a smaller geographic area, usually high per seat operating cost, limited access to capital, heavy exposure to shocks, and with that, generally very thin financial buffers. Most of these airlines are members of the European Regional Aviation Association, the ERA, that represents about 50 smaller airlines in Europe. And they are essential for connectivity, but structurally disadvantaged. Because, obviously, in some of the more remote areas of our continent, we need small airlines, but the economics barely let them survive.
Looking at some of the larger carriers, Remco, there's Air Baltic. They've got a substantial order, haven't they? Airbus 220s. Their Q3 results were widely reported as a success, but are they? What's the story there?
Yeah, you're right. They have 50 of these A220s in operation and 50 more to come. And if you look at the results, of course, it depends on what you compare them to. So quarter on quarter, they were better, recovering from earlier losses. But year on year, the story is quite different.
So, what's the driver of that? What are they going to do with these Airbus 220s?
So if you let's say compare the third quarter in 2024 versus 2025, so their profit is down, the EBITDA was down, the load factor is down, passenger numbers are down, and revenue is only up because the yields improved and it jumped by 10.7%. So Air Baltic didn't really grow its business; it's priced its way to a small quarterly profit. And what is driving that is that they basically went on a strategic shift with more ACMI flying, so flying for other major airlines, mostly Lufthansa, where they placed a substantial number of aircraft, I think up to 19, less low yield capacity and higher pricing. So it is to be seen where they will have to place these additional 50 aircraft, because basically with what they've done this year to date is moving flying away from their core markets in the Baltic areas, just because these countries are under pressure because of the war in the Ukraine. And they're also not that highly populated. So the demand is basically already accommodated by the existing flying program. So they do have to move assets away to ACMI. And then also they have a heavy reliance on the A220, because that's all they fly, which of course is still restricted by the engine availability. So they also have they're also burdened by the geared turbofan issues with the Pratt & Whitney engines.
So it didn't grow its profitability; it priced its way out of a corner. Is that what you're saying?
Yeah, indeed. It's not really growing in numbers, but we're able to, with this shift to tap into higher quality revenue. So per ticket they earn more. But the volume in passengers is not, really increasing.
And a big question has to remain, I think, of whether the market is able to absorb these additional 220 airframes with another 50 coming into the market.
Definitely not in the Baltic area. So they will have to move them somewhere else, or basically increase their flying for other operators, like they've now done with or are doing with Lufthansa. But then if they have to have another 50 come in, that'll have to go somewhere else.
Yeah, it's a lot of metal. Okay, now moving geographically to Air Serbia, that's an operator that doesn't feature on a lot of people's radar, but they look far more positive operationally. What's your take on it?
Yeah, they have quite strong momentum. They are the national carrier of Serbia. They're state-owned. They had 4 million passengers, which is a kind of a success that they reached earlier than same period last year. They were 2 weeks ahead. Load factor hovers around 79-80%. They're a mix of scheduled and charter flights, and so they're quite agile in the capacity deployment. So they're small but strategically confident. They are kind of they're a small airline that refuses to stay in its weight class. Yeah, they obviously have plans, and they also have, which is an opportunity, but also a risk. They have wide bodies. They also connect Serbia with the diaspora in the United States, and then also politically, they have a connection that they maintain with China, because Serbia and China are quite good friends. So that offers opportunities, but also obviously risks when, let's say, the market were to change drastically.
Okay, and cantering now towards the centre of Europe to Brussels Airlines. How about Brussels Airlines? What's your thoughts on Brussels
Brussels
Airlines?
has kind of it's the new Sabina, so the national airline of Belgium. Stable operationally, but the margins are quite tight. Their quarterly EBIT was down. Passengers are up. Load factor steady in the low 80s, but they're like Northwest Europe, faced with high cost and also heavy competition. And obviously, they are a smaller European carrier that's already integrated into a larger group. So they're part of the Lufthansa group, and for which they obviously receive quite a lot of support. And without, the picture would be harsher, I believe. So it's steady for now. It's not nearly performing as well as Swiss, which is also in the Lufthansa group, Swiss Airlines. So it's steady, but its margins are always walking a tight rope, I think.
Yeah, and that's evidenced, I think, by the passengers up by 12%, but the Q3 EBIT down by 14%. That tells its own story. Moving on to Romania and TAROM. Let's talk about TAROM. Romania isn't a Eurozone country, is it yet? What does that mean for this particular airline?
Well, I mean, it's clearly a structural disadvantage because TAROM, part of its revenue generated in Romania itself, is in its national currency, the lei, RON, but a lot of their expenses are clearly in euros and dollars. It hasn't made a profit for a long time, well over a decade. It's faced with an aging fleet, faced with a shrinking market share, because although Romania has about 18, 19 million inhabitants, there is market. But it's mostly taken over by low-cost airlines. So Wizz Air, TAROM survives on state support, and it's under EU-monitored restructuring until 2026, because it has received and it continues to receive state aid. So without it, it would not be sustainable at all.
And being outside the euro must be a factor, and also, since most of airline transactions are denominated in the US dollar, having a non-mainstream currency must be a factor here.
It is, for sure. So it loses margin before it even starts flying. So it's not just fighting market forces, it's also fighting its own currency.
Yeah. Let's get on to some of the niche carriers. Some small airlines survive because geography gives them a niche. Should we go through them? For example, one close to home here, Loganair.
Loganair is the lifeline carrier of Scotland. It connects Aberdeen, Glasgow with the islands, the Orkney Islands, the Shetland Islands, also the Hebrides. So it really provides well-needed connectivity from Scotland into the larger, more populated areas of the UK, but also the connectivity from Scotland into the islands. It's profitable but fragile, and it is faced with harsh environment, so weather, storms, and fleet age, thin markets. So the markets that it operates in are small, thin flows because of the small population and that limited headroom. So Loganair is a carrier that has a model with fleet types that they have to use to some of these islands. I think people know the example of Barra Island, where they operate twin otters that land on the beach. And so they have smaller aircraft. They're essential, but essential doesn't mean invincible. And so they are vulnerable to big outside shocks.
Yeah. And back to another niche, which is Binta Canarias.
Yeah, Binta Canaries is an interesting, it's the dominant carrier in the Canary Islands, also connecting the islands. It's a modern fleet, and it's also now expanding its presence into mainland Spain. So they're now with jets. So in the inter-island operation, they use mostly ATR, ATR turboprops, but they use jets to fly into Spain mainland. They are exposed to subsidies because some of the routes that they fly are subsidized, and tourism cycles. But I think what they have going for them is that the Canary Islands are, of course, the place to be for a lot of European travelers, both in summer and winter. And so they have a steady flow of demand that not only local people, but also people that want to do inter-island travel. And basically, when they go to one of the islands, they want to visit another one. So their demand base is much higher than, for instance, Logan Air is. So I think Binter has outgrown its islands, but the islands still define its risk. I think it is part of it is clearly based there. They have opportunity to connect and compete with, for instance, Iberia from Spain mainland to the islands, but they're very much Canary Island based.
And you mean that actually being tied to the island does restrict their ability to grow and expand market?
Yeah, I mean, unless they go on a completely different strategic plan altogether, which would come with a lot more risk, because of course the Canary Islands are also situated between Africa and the US, but I think that would be a bridge too far for now.
Yeah. Moving on to another island carrier, Emerald Airlines.
Yeah, so Emerald Airline is operating as Aer Lingus regional. So they operate some of the thinner routes from Dublin and also Cork to the UK and to other parts of Ireland. High punctuality, stable franchise model, but of course they're also dependent on what the possibilities, opportunities at Dublin, which is growth capped. And I think what they do well is that it succeeds by knowing exactly what business it's in and then sticking to it. And so they don't want to wander off, but they have
an old trick, but it just might work. Stick at what you're good at. Yes,
indeed. So they know the ATR well. They know the aircrafts they operate in quite well, and they stick to it.
Yeah, I can name one obituary carrier who failed to stick. Well, more than one who failed to stick to the knitting. Back to another island, Air Corsica.
Yeah, Air Corsica is it has obviously the support of the public. It's also connecting an island, support of the public. So Corsica, it also has seasonal demand that's supported. That's not only connectivity, community support, but also tourists that go there. Young ATR fleet, some larger A320neos that they fly to Paris to connect the island to the heartland of France. Purpose-built for essential island service. So Air Corsica isn't really built for profit, it's built for purpose, and that's to connect Corsica to France and to some other major tourism source markets. And it seems to be working quite well. And they also then have the protection of Air France. That's, although they're an independent brand, they're still supported by that group.
Right. And moving on to Widerøe and a bit about their profile and business model, perhaps.
Yeah, so Widerøe is Norway's largest regional airline, one of the biggest regional carriers in the Nordic countries. We all know that Norway is a very long country where land connectivity is often difficult because of the fjords. So Norwegians fly a lot. Widerøe operates a fleet of about 50 aircraft. So they have Bombardier, de Havilland Dash 8 turboprops. They have some jets with Embraers, and it serves a large domestic network of also with some quite short runways. And some of these routes are PSO routes, so it means that they have it's a public service obligation. So they basically maintain connectivity for some of the more remote areas of Norway, with some of the largest cities like Oslo and Bergen and Trondheim. And also, interestingly, linking it to its overall strategy for smaller carriers. It was acquired by the Norwegian group early last year, and making it now a part of a larger parent airline group. And it seems to basically benefit both sides. So Widerøe is doing well, and also allows Norwegian defensively to tap into demand for connectivity. So basically, some of the smaller remote Norwegian markets are connected by Widerøe into the larger aircraft, like I mentioned, Oslo, Trondheim, and then Norwegian can take these people further. Had Norwegian not have acquired Widerøe, someone else likely would have. And it gives it's a win-win. It gives protection on both sides. Obviously, it is then a matter. This is more operationally. It requires, based on the operational limitations, all the market sizes, its own fleet. So it will always require a different operation. The fleet that Norwegian operates with 7s just wouldn't work and wouldn't not be operational feasible for all of these markets. So it is different, but here I believe the sum of the parts is stronger than the individual entities here, and that's likely also a path that other smaller operations will have to.
Yeah, exactly. So getting significant synergies with the parent group. Sadly, we have to get on to the airlines in trouble and those who are in the obit section. Let's move on to the collapses. There's Play, BRA, CityJet, and now Eastern Airways. So what's happened?
So Play was the first one. Play collapsed. It has a thin balance sheet. Play was connecting the US and Europe via Keflavik, so via Iceland. Basically, very similar to Iceland Air has done successfully for a long time. Of course, Iceland Air is a stronger brand, has more distribution capabilities, and more larger network. And Play tried to imitate part of that, also following the example that Wow Air did. And so newer aircraft, A321s, Neos, but it's a very seasonal market, transatlantic. You have the long haul, low cost volatility, airport debts. So Play didn't really collapse from one big blow. It bled out from 1,000 smaller ones.
Which is often the case, isn't it? Lots of small problems contributing to a thin balance sheet and
I think
lack of.
Here in their case, because Iceland Air was connecting US to Europe with a very successful stopover program in Iceland. So a lot of people that travel to the US, which is a huge traffic flow, made a stopover. And it was well established. But I think we also have to talk about the fact, of course, that this is even visible in the performance of the transatlantic network of the major carriers, that the demand from Europe to the US has dropped a bit this year. I mean, there's still a lot of Americans coming to Europe, but vice versa, the demand has been down a bit, which of course has put pressure on the yields. And then for an operating carrier trying to sell that same OND, or origin destination, with a stop in Iceland in between, has proven more difficult, especially because it's not yet a very well established brand. So it also lacks distribution power on either side of the pond. And I think one last thing, interestingly, you see that with the new technology, the Airbus 321 XLR, long range or extra long range. But there's a lot of these A321 LRs already in operation that allows operators like Aer Lingus, like Iberia, like JetBlue, to a smaller extent also SAS, to already connect thinner pairs non-stop, which is an advantage over an operator like Play.
A significant advantage. Moving on then to Braathens Regional Airways, BRA.
Yeah,
maybe not on people's radar.
No, BRA it has entered restructuring. So there's two sides. BRA International, which operated Airbus family aircraft, not too large, we have 5 or 6. That has gone belly up, and now BRA Regional is into restructuring due to its high cost base. It's very exposed to contract flying. It flies for Austrian and SAS. The Swedish market is still soft, and they don't really have a capital cushion because BRA as an entity, it was part of it's a family-owned business that operated under their own brand up until November last year. But then it stopped, and with regards to the Scandinavian bit, was integrated into SAS. But I think the block hour rates that they received were marginal, and then if the cost increases and those rates are locked in, then your margin completely erodes.
Yeah. As is often the case when the tide goes out, you see who's wearing those shorts. CityJet, Remco, what's the story with CityJet?
So CityJet also went into kind of restructuring. It's now been taken over by a private investor who already has an airline in Denmark, the owner of Jet Time. So they're out of the woods, but also CityJet over-dependent on ACMI contracts, also SAS. They operate CRJs, which is a sunset aircraft. That means that it's no longer being made. So it'll fly for another few years. But also here, the age of the fleet, low buffer, contract volatility, and nearly took them down. So I think also here, CityJet proves that your ACMI is only stable if your customer is. And so
Funny old thing.
Yeah, which of course I have also personal experience because as in Nordica we also operated for SAS, and if your cost escalate quicker than your contracted rates, you're in serious trouble.
Yeah. And not just in the airline industry. After a long run, Eastern Airlines in the UK looks like they're in trouble. The story there is they're now in administration.
Yeah. They also filed for administration. All flights are suspended. It's an Embraer operator. I think they also have a few turboprops. Substantial losses, 20 million losses. Substantial debt, 26 million pounds sterling in debt. Aging fleet, no economies of scale. They did operate also ACMI for KLM. So some of the Embraer routes were operated for KLM from regional UK airports. I think it was built on seizing gaps, but those gaps became sinkholes. I think the scale just isn't there. And I think they had also difficulty with fixed contract rates and then increasing costs to keep their heads above water.
And you've mentioned that ACMI can be and is often a double-edged sword, Remco. Can you explain why ACMI carriers are just so vulnerable?
Well, they are so vulnerable because ACMI revenue depends entirely on other airlines' problems. So if your customer cuts routes, you lose flying. If their financials weaken, your contracts get renegotiated. So if they accelerate fleet renewal, your aircraft becomes surplus. And if they fix their reliability, they no longer need your capacities. Contrary to, for instance, the United States, where ACMI is called CPA, a capacity, it's basically a contracted capacity provider, because a lot of the majors operate regional routes with a different AOC. But interestingly, the three majors use one big, massive, consolidated ACMI or capacity providing airline, Republic, which has a fleet of a lot of CRJs and also moving into Embraer jets that have just different brands, but basically operationally. So from an asset management point of view and also a procurement point of view, it's one company. And then there's an agreement on a consistent revenue and also the way the contracts are set up, meaning that if you have a contract with a provider, you would want to have your aircraft staggered, so that the contract rates on your aircraft don't all end on the same day, because that is usually problematic. And so they're massive in size. They have hundreds of aircraft and they operate for all the three majors. Here in Europe, it's still quite small. It's still not hundreds of aircraft, usually a couple of dozen. And you see that, well, if an aircraft like CityJet and BRA rely very heavily on SAS. If SAS changes strategy, and so they've been financially constrained, so have been very focused on a low block hour rate. And if they change strategy, it has impacts BRA and CityJet. And also you see that even Air Baltic, which is now pushing for ACMI, for Lufthansa, it's not immune, because if you keep also flying for Lufthansa for a longer time, you're also going to have to change your spec. And because the Air Baltic aircraft all have still the Air Baltic branding, and I think if you have if you basically that contract continues for a longer period, then I would think that your customer would want to have you make changes to your branding as well. But I mean, basically, it is with ACMI, when your business depends on other airlines' problems, you can't afford to have your own. And that's often the case, because it's a very opportunistic relationship. You provide capacity usually for routes that are already quite thin. It means that the routes that you operate are clearly not the best ones. So there's pressure on the cost per seat, cost per block hour, cost per seat. And if it becomes too expensive, then those routes become unprofitable. And then your customer has a choice.
Yeah, and in an industry that's typified by thin margins. So let's turn to Widerøe. Where does it fit in the landscape of small European airlines, Ram?
I think we talked about Widerøe a lot already, but what is interesting, if you compare basically the Widerøe with other niche carriers that Widerøe and Logan Air are quite similar, although so they really serve a local niche market, although the scale is slightly different because Logan Air is really Scotland and Widerøe connects remote areas of Norway. And similarly, comparing them to Binter Canarias, they are both strongly dominant in a geographically isolated region. Difference between Widerøe and Binter Canarias is, like I stated before, that Widerøe doesn't really have the tourism numbers that Binter does because of basically the attractiveness of the Canary Islands. And also here with Air Corsica. Air Corsica is publicly owned. Widerøe is a private company, but they also do similar things. Although Air Corsica is structurally purpose first, profit second, and so it doesn't really need to attempt scale. It has a larger scale because it has more aircraft, because also basically the geography is different, and Norway has a lot more remote airports than Corsica does. And so Widerøe's market is much larger, and it must meet stricter commercial metrics than Air Corsica because it's part of a consortium of the Norwegian group, and basically it has a P&L that needs to generate positive cash flow. What is interesting, we talked about this a bit earlier already, but I think the model of a smaller airline being taken over by a larger parent is something that some of the smaller airlines would have to move to, because I think it is consolidate or bust. You can't really continue to fly unless you have a very strongly defined market that has all the capabilities like Binter does, with basically less seasonal effects because people go to the Canary Islands winter and summer. There's always demand. So you can basically tap into a much larger pool than just your geographic kind of main market, like Scotland or like Norway in the case of Widerøe. So in my view, Air Baltic, given the size of the Baltic region, just in passenger numbers, will have to be consolidated into a larger group ultimately.
Yeah. And other factors for Widerøe?
Well, I mean, obviously, when you have to modernize your fleet, you need money. And so that means you have to have a business that basically generates cash flow continuously so you can afford to modernize. If you're part of an umbrella group and you're allowed to operate with your experience and skill and knowledge on the airfields that you know with the requirements that you need to fulfill, because like I said before, you can't send a 737 to any airport. It just doesn't work. And the runway is too short, or conditions are
sand.
Or sand, yeah, like that. Okay. And so if you have kind of the autonomy to do what you're good at with market demands that you can manage based on the capacity that you fly, under the umbrella of the larger group that sees the added value of your connectivity, because it helps them too. I think that is a way forward that would.
So, just summarising, then, the sort of Widerøe's takeover imply for the other standalone regional airlines in Europe. It's clearly a marker, isn't it, that consolidate or die.
Absolutely, because I think that the trend is clear. Standalone regional airlines are just becoming increasingly unsustainable because scale matters more than ever. Because fuel now is at an acceptable level at $60-some per barrel, but ultimately, your fleet renewal, distribution, everything, financing, everything is more expensive for a small company. So being part of a group removes that disadvantage because you can basically lift on the distribution and the procurement of your parent. The regional networks are most stable when tied to a parent island. So Brussels Airlines survives because LAG supports it. Widerøe now has the same advantage. And that if you compare that to the smaller ones like Eastern and CityJet, CityJet will try now with a new owner, but then also BRA and before Flybe, all independents that either collapsed or nearly did. Standalone regionals lose out in contract negotiations. So SAS negotiates with CityJet or BRA or my former company, Regional Jet, so part of the Nordica group. It has massive leverage. SAS has leverage. Group-owned regionals like Widerøe or Lufthansa, Air Dolomiti don't face that asymmetry. Consolidation is becoming the default path because the smaller ones just can't fund free renewable, digitalization, the sustainability requirements. They don't have the buffers that are required. Unless they find people that really like operating in that small environment and like basically sleeping in their own bed every night, finding pilots and cabin crew, operated network. I mean, the good thing is about it, if you think of it from a customer point of view, and that's also what we did at Regional Jet, that you fly with your neighbors, right? So that has an appeal in the sense that the captain and the cabin crew and the people at the airport that you depart from, but that doesn't really increase your likelihood to fly more often.
Or profitably.
Nice. But to kind of conclude that, so group membership spreads the burden, and I think if you're a standalone regional airline Europe, you're competing against groups, and groups always win the long game.
Yeah.
So yeah.
And so Widerøe's acquisition wasn't just a sort of a Norwegian or strategy; it's part of a continual trend in your judgment.
I think it is. It's a part of a continental continuous trend, because it's now an airline that's part of a small club of regionals that are protected by bigger parents, like Air Dolomiti, Lufthansa, Air Nostrum, Iberia, and of course you have some of the smaller players that will ultimately merge into a bigger, because that is, I think, ultimately the best way to practice. And I think that here the trick is, like I said before, you have the protection of your parent company, and as long as you are allowed to regain the autonomy to work on the specifics of the kind of the network requirements, the operational requirements, and are able to keep connected to your customer base.
Perfect. And so basically, Widerøe shows the future of regional airlines. It survives best when they're part of something bigger. Let's bring this all together. What's the real predicament of smaller European airlines in your perspective?
Well, the small airlines, that their cost per seat are structurally too high, because they operate on smaller aircraft. So less seats, higher costs. For some of them, the revenue sources are fragile and seasonal. So you still carry the fixed cost. But because if you think about some of the smaller operators, just the winter demand, it's darker, the weather turns worse. So airlines by default decrease their winter schedule here in the Northern Hemisphere. You still have the fixed cost, so you have seasonal revenue. You have very limited resilience to external shocks. So if the price of fuel, for whatever reason, would basically increase, the smaller ones fall over first. They have weak access to capital, which makes fleet renewal slow. You have still some, the low-cost carriers keep encroaching, so with their low cost per seat. Some of the city pairs that you serve, you can also think in terms of you have a regional area that is your niche, but your low-cost competitor is still looking for basically your connection to a main market, like in the case of Loganair, Glasgow to the greater London area, or in the case of the largest city in your network to the second largest city that could still basically use the 737. And then lastly, regulation increasingly favors the bigger players, because they have more resources to basically spread that cost. So the market needs small airlines, but the economics barely let them exist. I think that is, the conclusion.
And the geopolitics that we're sitting in probably have never been more volatile. And that's not a place to be operating when you've got a thin balance sheet and the economics are running against you. Remco, that's an excellent roundup and summary, I think. For those of you who would like to look in this in more detail, we'll have links to all of the relevant airlines that discussed in today's review for you. And so from Remco Althuis and me, Barry Eustance, from the Stratos 12 Airline Consultancy, until our next report and review, we'll see you again soon. Do remember to like and subscribe if you're seeing this in YouTube or anywhere else. And hit the bell, because then you'll get the updates every time we post a new video with our latest summary of the airline industry and our perspective of it. So Remco, thank you very much. And until next time.
Thank you, Barry. And until we speak again. Bye, everyone.
Which will be very soon. Thank you very much, everybody. We'll look forward to speaking to you again very, very soon. Thank you. Bye.